Hi everyone, welcome to M Talks. This is Nikhil Mani.
This is Bibin Michael. Nikhil, how is everything going with you?
Good man. Things have been pretty good. Actually, this year has been started off pretty good. But listen, we were talking about IUL. I think there is some more stuff that
We talk about a little bit good stuff about IUL, so we'll talk more.
I mean, just want to talk about the different features and different what's the advantage of an IUL, right? Obviously, and everybody should know there is a cost of premium to all of these things. There's a cost of access to all of these things. And some people will say, oh, you can, if you were just managing your money directly, then you don't have to worry about any of these things.
That's a good topic.
So,
love it.
That's what most people that are highly successful or self-managing their money will say. Why do I need an IUL? I can just invest into the variable market and then manage it and do a really good job at doing, active management and reduce my downside risk and all of those different things. Why do you think that's maybe a miscalculation on their part?
No, actually, it's not a miscalculation. Basically, if you think there's a term called like that, invest money in the term, invest the term. No, it's like a buy term.
Right. Yes.
That's
a strategy.
That is a strategy, right? So, is there anything wrong with the strategy? There was nothing wrong with the strategy, but the strategy was old. That's it. Right? It was an old strategy. At that point, that was the best strategy.
I think that especially came into picture when the whole life insurances were not, where the growth in the whole life insurances were basically being nullified.
I think we talk about this in the first episode, right? The initial insurance was the term insurance. 10, 20, 15, 20, 30, 35 years insurance. And then they introduced the all life. All life was like a premium is high. And the money growing inside the all life is also very, very limited. So at that point, during that era, the strategy was great. So, people making strategy or following strategy for a better growth or better saving strategy, right? So that time it was absolutely fine. It was okay. So you can buy instead of you purchase all life for $300, why don't you purchase a $250 for the same coverage term insurance, and you invest the rest of in the market or mutual fund, or your money will be growing. That's the ideal strategy, right? That's true. But is that the same, or is it still competing with the IUL? No way. There's no way. The reason you can purchase a term insurance, which is great. But the problem there is actually the previous strategy was we need coverage. The insurance was using for protection, coverage, death benefit. If something happened, we need to have family need to be protected. For that sense, term insurance is okay. But is that the current situation? No. So we need a little bit more better coverage or lifelong coverage.
As you get older, you're saying.
Right.
Yeah.
As we get older.
And when the term expires.
At that time, you have until 65 or 70-year-old, you have term insurance. At that point, if you're looking for something, coverage, maybe not eligible.
Right.
Maybe health is not good. Maybe your age is too much. Or even you get approved, it's going to be too much money. So on that sense, getting only term is not an option anymore, right? So that is the one big debate people telling outside. Instead of getting permanent insurance, you can buy term and invest the rest. You can manage yourself out in the market. It's good. It was also a good strategy, but right now maybe that not that great. So if you're still using talk about using a Nokia old 3310, the blue phone, and comparing that with an iPhone or a smartphone, comparing that cell phone with a smartphone or iPhone, what will be the comparison? The same thing you can compare with.
Yeah, I mean, obviously it's a little bit more closer when it comes to managing your money privately and having an IUL protection and stuff like that. But this is where I think I want to start the kind of expand on the conversation. So, what does the IUL provide other than protection that people should know about?
Sure. A lot of things. We can talk about few things here today. Definitely IUL is a life insurance product. It comes under life insurance bucket. So
it's not an investment product. And we don't talk about we're not regulatory restrictions are there to talk about this product as an investment product.
Correct.
Okay.
So we will be following all the regulatory guidelines.
Right.
So here, so this is also a typical a life insurance product. It comes under life insurance bucket. So which says this product also have all the features of life insurance. So definitely you will getting a death benefit if a death happens. The money goes to the beneficiary. That is there. On the top of that, there is something called living benefit. Death benefit, that particular coverage go to the beneficiary. Living benefit, the same benefit goes to yourself while you're alive.
This is for your coverage. This is for your is that for your total policy coverage based on that? The living benefit? The face value. That's
face amount. Yeah. Correct. Okay. The living benefit depends on the face amount.
Okay.
So it's not from the money
that we've been talking about.
Okay. We've been talking about cash value.
Right.
All those.
Yes.
No, it's that we're talking about living benefit purely connected with the
your face amount of your protection
or the face amount. Correct.
Okay. Got it.
So we can get our death benefit while we are alive. Simply. So before, I know a lot of people talk about, even me, including me, like hear about life insurance. We usually think, who need money after death? Kids will be, I'm going to provide them enough education. They will be capable managing their own expenses. Why we need a death benefit? And I don't want to give money to anybody after my death. Tell me if you have anything for me to use while I'm alive. That was the common comments we usually. So if someone asks me right now, I can proudly say, yeah, you can use your own money. So we can access our death benefit while we're alive. In the multiple different forms we can access, or multiple scenarios we can access. So there's something called terminal illness. Terminal illness is clearly if a diagnosis comes into picture. We'll talk about cancer. Cancer is everywhere.
Yeah.
It's not a unusual.
Everybody's experiencing.
It's not an unusual topic anymore. It's everywhere. Think about a cancer coming in detected, and doctor is diagnosed and he's telling your life expectancy is less than 2 years or less than a year and a half or less than a year. Depends on the company or the product what we're having. Some company provide you if the life expectancy less than 24 months. Some company give you less than 18 months. Some company give you less than 12 months. Depends on the product what you have. You can access your death benefit.
All of it?
Not all of it. Basically, the time you claim it. If any situation comes like this and when you claim it, the company will tell you whatever the coverage is, depends on their underwriting value. They will let you know. Take an example. Maybe you have $1 million coverage. So the moment they actually considering, like, it's actually for living purpose, right? So they're looking into is actually how healthy you were or how old you are and how much money you will be making, what is your life standard and how much money you need to live your life. And they will be counting and they will let you know. Maybe if you have $1 million, they will tell you maybe 600,000 we will be able to cash out if you want. At that point, if you are in need for money, you can cash out. There's an extra option there.
That's living benefit.
That's living benefit. And if you don't want to use it, continue your death benefit. 100% death benefit will be there. So that will comes out as a tax-free. And also, there's one thing we call about terminal illness. There's something called chronic illness. Chronic illness is actually, there is a daily living activities, 6 of them, like a bathing, dressing, toileting, transferring, continence, eating. Out of this 6, if 2 of them you cannot perform without someone's help, and this situation prolonged for more than 90 days, then also you can access your death benefit.
So it has to be at minimum 90 days.
Correct. Chronic condition usually, Medicare covers, if you are eligible for Medicare, covers up to 100 days. So basically, that coverage everybody will be using it.
So that means if anybody has to qualify for living benefit because of chronic illness, they have to experience that chronic illness for 90 days before they can apply?
If you are, the situation is prolonged more than 90 days, then only we'll call chronic condition.
Got it.
Then only this will come under that guideline.
So living benefit is not for people that have, like, let's say, an accident.
No, accident also. There's another thing coming. Accident also can come. If an accident comes in. And there's two out of the 6, 2 of them cannot perform.
Right.
And the recovery may be prolonged for 6 months. They're also...
But they can apply for that from the beginning, not wait for it to be categorized as chronic.
No, they also get paid on the for day 1. But they will be eligible only after 90 days. If the situation prolonged 90 days, they will be eligible. They will be able to use it. But the payout will be from day 1.
Okay, so so there's how about this? How about if it's a brain tumor and you're getting surgery and there's a 16-week recovery period, right? You don't need, theoretically, within, if everything is normal, you have a progression, 4 weeks, you should be good to go.
Then you don't
qualify.
You don't need to use it.
You don't need to use it. But what if they say you're good to go, but you're not good to go? Like, what I'm trying to say is this. So they say anywhere from 4 to 16 weeks. 16? Did I say 16 weeks?
You said 16.
No, okay. So 4 to 16 weeks, right? So what if it goes, the recovery is not going and it's not getting like according to that 4-week period, like it's extending all the way up to 16 weeks. All
this eligibility, everything is matters. It depends on the medical, the medical judgment, medical doctor judgment, right? So if they're judging out like and it's coming out like you are eligible, then you will be eligible. If they say you're good to go before 90 days, then you're not eligible. You're not eligible. There's no company connection with. It's actually purely depends on your medical situation. That is the second thing. The third thing will be critical illness. Critical illness, the heart attack, coronary bypass surgery, stroke, severe burn. What else? Severe burn. I said stroke already, right?
Stroke.
Organ transplant. End stage renal failure, the kidney failure. All those things. There's a few more, I believe. So any of those things comes and you need money, you can access it.
From day one.
That is also depends on the medical situation. And if you're accessing, this is also comes as a lump sum. All this, what I mentioned, all these categories comes out chronic, critical, terminal, all comes out as a lump sum amount.
Oh, so it's not like a payment that...
No, it's a lump sum amount. When the lump sum comes, they will decide how much you are eligible from your death benefit. If you want to take it, the policy will be lapsed. You're going to collect the money. That's a done deal.
Got it. Okay. Right. So they're not just paying you, like, they're paying you the entire... that present value for that face amount.
Exactly. So they're letting you to close out the policy early. That's it.
Got it. Okay.
If you are in need... That is a big help.
Yes, it is.
If you don't need money at that point, then you don't need to cash out. You can keep going, right?
Keep going, yeah.
And that's one thing.
And your health is not a factor with regards to your premiums because your premiums are locked already.
Exactly.
Got it.
And one other thing is actually another feature you can talk about is long-term care. Long-term care is a rider. We can add it. If you add that rider, it's going to be there's a certain fee, but it's monthly, maybe $18, $20, or $15, something like that. Purely depends on your age and health and average idea, I would say. So if with that rider you're adding any of the nursing homes coverage or hospice center or adult daycare, so many of the facilities will be covered. So how the payout will be? You can choose when you apply it. Application you can choose. 2 to 4% of your death benefit you can claim it if you're using any of the long-term care. But you have to choose which one you need to use it.
So you have to choose it up front.
If you're using 2%, you can choose from 2 to 4. So if you're using 2%, that simply says 2% of your death benefit or face amount, you will get it guaranteed monthly until that face amount wash out. So we'll take an example. If you have a $500,000 coverage, right? And if you're choosing for 2%, $10,000 guaranteed if you're using any of those long-term care, formal home care or informal home care. If somebody is actually taking care of you home by your family and you still get it. So they will paying you. It's purely also depends on the company. You have to make sure the company pays to you or to the facility. If you are only paying to the facility, then you need to be treated at the facility. Then only you will get covered. If you're if you're getting
taken care of by
taking it
your
anywhere,
child or something.
right? And you will be able to get it. So this is how it works. So imagine.
So basically, what you're trying to say is this: like, if you're if you have a policy like that, right? The best practicality for that particular like long-term care rider is, let's just say you have, all right, you got arthritis, right, and you can't do stuff, and so you need 100% care, right, for daily activities, and one of your relatives, or it has to be any relative.
Let me add on to that,
Yeah.
Nikhil. Basically, if you are planning to retire in this country, right, when we need to use those medical or the long-term care expenses, usually when we get old. So what are the main reasons we have to go to a chronic situation? The one main thing is actually fall. When we get older, our steady gait or our balance will be affected. When our balance affected, if we fall down, clavicle fracture, a rib fracture, hip fracture, these are the situation we are going into a chronic situation or even to a death. To avoid this, basically, we have to maintain when our, the doctors or your primary doctor, when we do the visit, they used to do like a fall risk assessment. This is actually 0 to 10. When the number is go up above 5, that's the time doctors usually suggest you to use, the assisted living or community living services, because if you stay by yourself, it's danger. That's the time we start using all these services.
Got it.
So when we start, who doesn't go through this situation?
Yeah.
Anybody, everybody. Why we don't know about this? The only reason is we haven't seen anybody using around us, or even primarily, or even the people using. They used to
don't take advantage of that because they don't know what they have. Basically, a lot of them.
One reason, right? Yeah. So that's why if you're using any of those services, we need to have coverage. If you are planning to retire in this country, ASAP, as soon as possible, you need to get this covered. This is a mandatory. I would say this country, if you're planning to leave this country, 2 things is mandatory. One is will and trust. At least living will. It's very inexpensive product. The second thing is long-term care coverage. Without these 2 things, planning to live this in this country, it's really
asking for trouble, right?
Yeah, it's not.
Because you're eating into your savings at that point.
Exactly.
All right, so going back, so the practicality is basically like, if you need constant, like, you need to be around people so that you don't hurt yourself further.
Correct.
And when you're at that point, you can tap into your life insurance protection policy, your death benefit, or your face amount of your life insurance policy.
Exactly.
If you have a long-term care rider, which IUL does have an option for.
IUL, right? Some companies does have. So you need to know which company offers. So best option is I don't do that, but if you go to one company, they will give you what they have. If you go to a independent broker, they will be able to find what company has the best for you. So going to one company agent, it's always recommended is going to a broker. Because you can easily find the market availability. So if I work for one company and we working together, what did I tell you, or how will be my conversation going? I have this, I have that, I have this work better for you, this work. So I will try to sell my product. But if I'm a broker and you're coming to me, I have access to many companies out in the market. I can easily find your need and I can find the
product that meets your need.
Correct. For matching for your need. So that is the main difference. So who you need to talk, it really matters. If you need to get information, you need to talk to, or if you need to compare the market and find the best, you need to talk to a broker.
Got it. So apart from long-term care rider, critical and the living benefit, is there any other advantages to an IUL?
So far we talk about death benefit, critical illness, chronic illness, terminal illness, a long-term care. Also, you'll be able to utilize the index strategy if you're going to IUL. The market potential you can utilize, and the market downside market will be protected. And what else? You can grow money tax-free. And you can borrow money from it after 10 years without any interest. 0%.
Tax-free.
Tax-free, 0% interest.
Yeah.
and
So it's basic. It's a multi-purpose tool.
and also you're giving wealth transfer.
Oh, we didn't talk about this.
No.
So talk about this. Why do the rich and wealthy? I should say the wealthy. The rich is short term. Wealthy is long term.
Correct.
Why do the long term? Why do the wealthy invest heavily into these products?
So the wealthy is investing depends on the
I shouldn't say investing, but you understand what I'm saying, like contributing,
right?
Yeah.
So the reason for contribution on or utilizing these products into the max is actually they understood the potential of it. That is the one thing, right? So how they understood the potential? They are from maybe from different industry.
They are financial advisors.
They're correct. So they do have professionals working for them or working with them. So that's the only way we can get access to these things. Get to know these products and services, and if it's usable or if it's beneficial for you, use it.
Yeah, and then with regards to wealth transfer with IUL, basically it's a tool that you're able to use to prevent paying inheritance taxes, right? Is that right?
Exactly. So how, if you're giving to your next generation, you being wealthy or you worked hard, you built your business, you made money, you financially set. Now you're not going to take it back when you leave this world, right? So you have to leave this for your next generation. So how are you going to leave for next generation? What is the easy way to give money to your next generation or the wealth to next generation is life insurance.
Yeah.
The reason, anything you provide to next generation, right? You build the multiple properties, and if you're giving to next generation, there will be inheritance property tax will be coming in. There's a lot of or we're going to talk about that in another episode. How to balance this out also possible. And generally talking, anything you're leaving for next generation is taxable. But if you're giving as a death benefit, is tax-free, 100% tax-free.
Which is underrated. I think people don't talk about
realize
this a lot. Yeah.
Right? So if you look around, many people, this country, being a business owners, right? Maybe they're not educated as much and maybe they don't have a huge financial background as you. But when you compare you and them, they do own businesses, right?
Mm-hmm.
They're being wealthy by all the education what we gain, and you working for somebody in their life and retire after 40 years
and live paycheck to paycheck still.
Paycheck to paycheck. So what will be one of the difference is actually how those people are able to start a business, how they can invest to start a business, even small scale or big scale, where they're getting money. They're getting money from their grandparents' life insurance and death benefit. It's tax-free. So they're utilizing it. And what we do, or what you do, run away.
Yeah.
We don't like life insurance. That is the difference. So life insurance is not a bad word. It's not a bad thing. It's a great thing. And if you're living in this country, it's a mandatory thing.
It's a necessity. And on that note, we'll finish today's episode. But
yep. So no more running away from life insurance. But I mentioned earlier, don't get into traps. You have to get a little bit knowledge before you purchase anything. So get to know more about it, and you can always reach out to us. You can direct message us or comment us. We can always have a conversation growing in our comment box. So if you have questions, the good thing is the explanation or the answer that we give, others also can watch. So be interactive in the comment section, and if you want to ask us, you will be available. And go from there.
Thanks, everybody.
Thank you.